Hey everyone, hope they're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at Twitter. We're also probably going to look at some ratios and trading view for the charts. I want to see, with gold freshly breaking out, I want to see how these ratios are interacting with each other. Gold versus platinum, platinum versus silver, gold versus silver, those types of ratios. And I also want to see how the gold and silver mining companies are faring as well. It's important to continually see how these assets are performing against each other. We want to see outperformance of the gold and silver mining companies in relationship to the underlying commodity, as that is an indicator that money is rotating and that it's a legit type move. And I do think that we could see some good outperformance of the mining companies. And now is the time to be looking and firming up that portfolio for that move. So let's take a look on Twitter. We'll go there first, and then we'll look at the ratios and charts in the charts. So let's dive in. And again, if you want to follow me, it's at finding_finance. And if you want to know how I'm playing this bull market, you can go to finding-value.com. You can see my portfolio. I am actively updating what I am buying, when I'm buying it, and the prices I am buying it at, so you can see what I am doing and what I am buying as a reference. So here's Grady. He says, this chart for gold in yuan is bullish for XAU USD. It broke out front-running, basically gold price in the United States dollar back in 2019 before the big move. And it did this, and it did it this time around too. East is slowly phasing out the USD and taking over. Very big change is coming for the West. Big consolidation pattern breakout, big consolidation pattern breakout. The thing to take note here, guys, is these consolidations and these breakouts correlate with some data behind them in terms of yields. So they do correlate with yields. I do show that on the weekly updates and my opinions around it. So here's silver and uranium, U.UM, the Sprott Physical Uranium Trust. It says where we are. Look at where we are going, not where we are, if you understand that. So we can see back, and this does correlate with where we are in the commodity bull market. The big picture here of the candlesticks is silver. The black line is the Sprott Physical Uranium Trust. There is a large correlation between these two asset classes, and the correlation is the market conditions that they trade under. When we're in an inflationary environment, we can see when the liquidity comes in the market, silver likes to take off. If the market conditions are right, uranium's going to follow suit. Silver, gold are our leaders. The followers or laggards are oil and also the Sprott Physical Uranium Trust. We could see, and we are seeing silver breaking out, but we could see uranium also follow suit, given that we've got the same market conditions. Are those conditions the same? I'm gonna go out on a limb and say, I don't know if they're exactly the same at this moment. We do have a lot of fear in the markets. They are responding with liquidity injections into the markets. So I do think that this could potentially have silver lead and then uranium follow after. So I do think that they are similar, but they are definitely not the same as they were potentially in 0506 type conditions. So they might be a little bit different. Things may behave a little bit differently as we go forward. Here's Grady again. It says, posted this chart at the latest backtest of the black support line. I think it's time to revisit the upper trend line of the channel, repeating the move from 2000 to 2007. This is Huey. Huey is a gold and silver index. And we could see a big breakout eventually, which could correlate well with a secular bull second leg. So this is the first leg, the big consolidation period, and then a breakout and a big second leg for a bull market in the gold and silver index here, gold bugs index. Coming on down, it says just another week, another API weekly draw. Rocket soon, question mark. So this is API weekly oil and products inventory report. Crude oil down 4.3 million barrels. Gasoline's down 3.9. Distillates down 3.7. SPR release of 400,000 barrels. So we are seeing the draws in inventory already. This is going to get interesting, guys. Very, very interesting. Here's the global liquidity heat map looking better. U.S. Federal Reserve, it's green, got a little red, green again in 2021, but it's been really red across the board of all these different central banks in 2022. That's our slowdown, liquidity coming out of the markets. But look on the right-hand side in 2023. Dark green for the U.S. Federal Reserve. We've got some green in the Bank of Japan. People's Bank of China has been green late 2022, early 2023. We do have some liquidity coming back into the system. So that is something to actually talk about and watch. That's why gold, I think, is also reacting to the upside. We've got here, he's got recession. It says yield curve flattening signals recession is on the horizon, but flattening followed by sharp re-steepening means a recession is imminent. So basically, if we beeline it higher, like it did, beeline higher, if we really start to take off, and what that means is it's the flattening of the yield curve as a signal of a recession on the horizon. But the risk becomes imminent when it re-steepens. And that's what I'm watching with some of my signals, is the yield curve and how it's moving back up. If we get an acceleration in the yield curve, we could see a recession, but that's also going to be positive for our gold and silver and precious metals holdings. And that's the indicator that I'm watching. It says Q1 silver drilling highlights, expanded edition. So here's the silver intercepts, gold resources, hitting some of the thickest, most dense areas of silver. Abra silver resource, Aya gold and silver, New Pacific Metals, Vizsla silver, and on and on and on from there to the downside. So you can look at that. If you want to follow me on Twitter, you can find that. If you want to see the silver intercepts on the exploration companies. Now here's silver versus U.S. oil. I know we looked at uranium, but here's oil. Oil is generally lagged behind it. And so we can bottom, but then it usually lags behind silver. Silver kind of gets its shot, its a few moves higher, and then it kind of consolidates, and then oil kind of lags behind it. So by silver breaking out and moving higher, we could also see oil take off with it. I don't think this is a 2009 to 2011 type move where we get stimulus in the system and the housing market is shot. I don't think the housing market's shot. I think we've got more upside, and I think we've got a leg 3 or a wave 3 on oil. So that is an interesting chart. I do like that correlation. It says silver's at a critical juncture again. After 5 different attempts, this long technical resistance looks ready to be broken. Ultimately, I believe the metal is headed significantly higher, and we could see this break at any second to the upside, this downtrend line, and rip it, Lotto, rip it. We got Patrick. He says silver now in the pre-ignition zone. Buckle up. So we'll pull up his chart of the pre-ignition zone. Silver quarterly log chart, roadmap to rocket ship takeoffs. We've broken out of this early breakout line. We've got a couple horizontal lines of resistance coming across. 2475 is the pre-ignition line. 2750 is the final takeoff back to all-time highs. So hopefully we can get this momentum. I think the market conditions are right for this to happen. And now we just have to sit and wait in the stocks that at least I'm in. I'm going to ride this thing higher. I also posted gold surging higher, lower dollar and yields. And we've broken to the upside for gold. And we're starting to take off to that upside for gold. So gold is our leader. It is taken off. Looks fantastic. Let's go back to the ratios. So I've got platinum gold ratio here. We are moving higher. It does look like we could have gold surge a little bit. You can see this pullback here. Platinum is more inflation sensitive. Gold is more fear driven. So what could happen is the fear comes in first, It pulls this back down, and I think we could even pull back down a little bit more in the ratio. And then platinum, I think, is going to turn when that liquidity comes in the market and that inflation reliquefies. Platinum's going to turn and start beating gold, beat its butt off of gold. Platinum is beating palladium. We're seeing a nice move higher. We're at 0.7 currently, and it's in a nice uptrend where I think platinum's going to outperform palladium based off the market conditions. And then we've got platinum versus silver. Silver is more of a fear trade, but platinum's more of a inflation trade. So we've pulled back against silver. Silver's had a rocket ship move these past week or two. So we can see that silver is beating it in the short term, but I do think this will turn at some point, and platinum will outperform silver when that inflation comes back into the system. Gold to silver ratio. I'm expecting this to be favorable for silver over the past few weeks if it decides to show up. There it is. So we look at this from a big picture view, guys. This is a inverted head and shoulders pattern. Shoulder, head, and then a shoulder that has developed. And I could do this. This could be the shoulder there. We look at this, and it is starting to move back to the downside, where silver's outperforming gold. I think that's going to be the spot to be is silver in the short term. And then I think it will be platinum when the inflation kind of comes through that system. But silver's doing real well. We've got palladium to silver, and silver's crushing palladium with that ratio moving to the downside. So silver is definitely the spot to be out of all these. We've got Dow Jones Industrial Average versus gold. Gold is outperforming Dow Jones. It's still compressing to the downside. We've got a big move here, a move on up with that disinflationary period where the housing market was basically regathering itself, and then I think we're going to drop back down again. This is gold price and Dow Jones Industrial Average. You can see we're breaking out to the upside when we flip these, just to show you that we've got a breakout looking at it from a little bit different perspective. Let's go down to the ETF GDX. We can do some GDX charting. Here's logarithmic. You can kind of see like a shoulder, a head, and a shoulder that's developed, inverted head and shoulders perhaps, where GDX could outperform gold itself. That is important, and hopefully that occurs. We can also see we've had a downward movement, a sideways basing movement, and I think eventually we're going to have an outperformance where GDX outperforms the gold price or gold futures price. And hopefully that's the case, because I'm positioning gold and silver mining companies right now. And if we can see that outperformance, if we get up here and really start to take off, there's going to be a lot of purchasing power gains in gold and silver mining companies in relationship to what we've seen in history. This is a huge opportunity for anyone looking. GDX versus REMX. So GDX is starting to outperform all the ETFs. We can see it starting to move to the upside. This is your purchasing power gains when you get one ETF outperforming against another ETF. GDX versus SILJ. I do think this is going to turn back lower at some point, where SILJ will be a very good buy soon, and this will come back lower. We've got GDX versus URNM, and GDX is continuing to lay the smackdown against all these other sectors at the moment. This is an inverted shoulder, head, shoulder that's breaking to the upside. So that looks good. GDX versus XOP. Look at how nice these charts looks, guys. Breakout, higher low, higher high, new uptrend. New uptrend, guys. GDX is the spot to be so far. GDX versus COPX. God, that looks so beautiful for a nice big move higher. What's causing these moves is the market conditions that we're under. It's the inverted yield curve, the curve that is uninverting, and the fears in a potential recession that is coming, that is creating this market conditions where gold's going to outperform. GDX versus OIH, going higher. It looks beautiful too. Look at the size of these candlesticks. Look at the bullish engulfing here. on the weekly candlesticks. The breakout of the trend higher. GDX is going to crush it. Now here's SILJ. SILJ hasn't broken out against silver yet, but I think, remember, when these things are late stage, this thing could be a burner to the upside. And SILJ is outperforming against all these other ones. Here's OIH. You can see the resistance trend line. We came all the way back and retested it, and now we're starting to break out and move to the upside again. SILJ versus XOP. This also looks good for a move on higher. Looking fantastic, guys. Look at that. We're ready to break here any second to the upside. SILJ versus URNM broke into the upside, and it is cruising in a new uptrend. New uptrend started this week. Shoulder, head, shoulder. Breakout, retest, boom. We've got SILJ versus REMX looking fantastic for a break here to the upside. Hopefully that thing breaks. Inverted head and shoulder, shoulder, head, shoulder. We've got SILJ versus COPX. This is also looking very good in here for a continued move on up. So that also looks very good. Very, very cheap down here. My Lord. And SILJ versus TAN, which is the solar ETF. Breaking out to the upside for SILJ to outperform TAN. So I went over a lot there. A lot of precious metals related things, a lot of ETFs. GDX and SILJ look really good, guys. They look really good, and I think we could see continued outperformance based off the market conditions changing for those to continue to move on up. That does not mean that they go straight higher. We're going to have pullbacks. We're going to have down days. It's a grind higher. And I think it's probably going to last for 7, 8, 12, 18 months, somewhere in that range. 6 to 18 months, put it that way. That's how long it will last for the outperformance. We could see, I mean, and remember, guys, we could see liquidity come in the market and everything go up. That is a possibility. But hopefully, GDX and SILJ outperform. That's what it looks like with these ETFs and the ratios. It looks like they're going to outperform. It looks like we're getting an uninversion of the curve where when this starts to steepen, we could see a slowdown in the market. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. You can see what gold and silver mining companies I'm buying. Some of them are pretty, I'll say, kind of on the boring side, and some are really like they've got a lot of kick in the pants, swinging for the fence type stuff too. But that's what I've got for today, guys. Hopefully you've enjoyed it, and we'll catch you next time. This is Finding Value.